Good day, guys. Welcome to Forex Walker. Welcome to episode 59. At the moment, we have on our screen the Euro Pound. We're doing a price action projection. We're doing a catch up on some of the trades that we have. Remember what we trade in price action, which is known as Wyckoff schematics. We're looking for our first touch here. Our second touch was made here. I hope you can see that. Let me show it to you. Second touch was here. Well, we always expect the third touch to manipulate. Where does it manipulate on this weekly time frame trend line, or what we call a primary trend line? So we got the manipulation. Now at the moment we're selling the euro, but there's an issue with the pound. The pound is also selling. Remember, the euro is bullish in when we look into macroeconomics, the euro is actually moving out of the recession. So, and they started cutting their interest rates on the 6th of June last year in 2024. That means they've been cutting the interest rate cycle. The interest rate cutting cycle in Europe uh, had been continuing over a year, because from June to now we're in October. It's almost 18 months of interest rate cuts. So the euro is really not getting where it's supposed to be. But when we look into the hedging of the inflation, the euro is actually exiting the recession, but it's not there yet. We are expecting it to exit the recession. So the reason why you see that Euro JPY looking like it is exiting is not the euro that is exiting, is the JPY that is getting weaker and weaker after the previous spike. I think it was on the or in April. So the spike on the volatility index. So that's the reason why we had the JPY giving us a spike and collapsing for the rest of the year, and it will keep collapsing. So at the moment we have a compromise where we are selling the euro, and the pound is also in a window where it is supposed to be sold. So we're looking at both currencies that are selling. Remember, we're trying to sell the market manipulation in the euro pound here, and we're trying to buy the pound, but the pound is getting weaker and weaker, and the euro is also getting weaker and weaker. So we cannot expect it. Even if we do get a downtrend, let me move this guy for you. Let me move this guy for you. Even if we do get a downtrend, both currencies are weak. So we might get something that looks like this, like a sideways move. It might break the previous lows, but the trade will not go as far as we're expecting it to go. It will not just drop like a stone. Like here, we're not expecting something like this. We're expecting a sideways move that will be prolonged for a given time. So there's a high possibility that we might get something like this, a break above this level actually, because both currencies are weak. But if we get a huge weakness in the pound, then we might get something like this. But I'm not really expecting the market to go all the way above this level, above this blue line. Okay, it might get there, but I'm not expecting it to go above uh, the uh, the this white line that you see here, which is the zero line on the Fibonacci. So I'm not expecting the market to go all the way up there, but even if it does give us a downtrend, but it will be sideways. The euro, yes, we are selling it, but it is currently bullish. in the name of macroeconomics, but because we are selling the euro based on the Danish krona, we're expecting the euro to calm down a little bit. So we're not really expecting that much of strength in it. But the pound will take off, it will get bullish, but not now. So at the moment, we are in the market selling the euro pound. The place where we're trying to sell the market to is actually far from where we are. So I'm not gonna be give upping. I'm not gonna give up on this trade just because I both currencies are weak in a short space of time. I'll be looking at something else, and I'll actually be looking into other reasons, other trades at the moment. Let me just move backwards in that direction. So here we have the Euro CAD. At the moment, we're trying to buy the CAD. So what is happening here is that both currencies are both getting weaker. We're both selling the euro and the CAD, but the CAD will get weaker. But I'm expecting it to at least turn around at this level because the CAD is getting weaker. I'm expecting it to at least turn around somewhere between. But if it doesn't, it doesn't. So, and if this method does not work, we can look into the CAD JPY. But with the CAD JPY, we are not going to get the actual pullbacks that we're looking for. The reason why I'm not looking into the CAD JPY is because we're having issues with the volatility index, or what the okay, here it is. Well, we do see it, but I'm not looking for that huge of a pullback. Where those who talk about market gaps, we're looking into, we're expecting this market to at least close 50% of this market gap. I'm not expecting it to go all the way down to this blue line, which is my actual entry. So I'm just expecting it to turn around at the flip zone. As you can see here, we have a gap between those two candlesticks where we might get that actual reversal. Let me show it to you. Where we might get that actual reversal. This is what I'm expecting. The hidden things that you do not see if you cannot read between the lines. So let me bring this guy over here. If you cannot read between the lines, you won't be able to see the pullbacks in inside of the JPY trades. So this is the market gap where I'm expecting this baby to turn around before it goes higher. Normally, you don't see the kinds of pullbacks that you were looking into on the JPY. Let me show you an example here. Uh, an example here could be that we we have a like a 50% turnaround here. Okay, this is the lowest we went because we broke below this low. So this might be one of the pullback levels, but I won't be expecting a pullback from that. Look at the pullback. The pullback goes to the highest low that is available. We have two lows down here, and this is another low. So, but the market decided to take the highest low and turn around. So that's what I'm expecting. I'm not expecting that much of a pullback here. I'm just expecting the market to fill up the flip zone here where the market will turn around and rally higher. So that's what I'll be expecting. Uh, on the JPY trade, here it looks like the CAD JPY is exiting the recession, but that is not true. The CAD is not ready to exit the recession. We can look into it with trades like your Euro CAD and the other trades that you can catch. But at the moment, we're just seeing this, but that this is not really what is happening. The cat is not exiting the recession. It's not there yet, but it's about to get there. But because the JPY is getting weaker and weaker, that's why we believe that we might be getting that weakness that we're looking for. So that volatility index spike really gave me some goosebumps. I thought that the market will actually, this is the Euro Turkish lira. We are trading those tourist arrivals in Turkey, and we're currently selling the euro based on the Danish krona. So at the moment here, we had that spike in the volatility index that gave us both pullbacks. This pullback was slowed down by the pullback on the euro as well. So both currencies were getting weaker together. That's why we didn't have a spike that goes all the way up here, up there. That's the power of trading high risk currencies. When the spike comes, they cushion each other to a point that the pullback is not really that big because both currencies get weak when the volatility index gives you a spike and the JPY also creates a spike. So I want to show you something on the take profit level that I'm looking into. Let me show you. This is the previous trade that happened not so long ago. It happened last year. So don't look at this zooming system that makes you think that the trade is actually dropping that much. It doesn't drop that much. So I was looking into the pullbacks. These parts here are the flip zones. This is where you get the flip zones. So the market normally turns around at an order block here or an order block here. As you can see, we have a flip zone here, and the market goes to the lowest order block, which I don't believe I will be using because I don't want to hold a pullback like this. This is the largest pullback that I might hold. And on that side, this pullback was created by that volatility index. So at the moment, I'm expecting the market to at least before it to at least manipulate this order block here and drop to the trend line. Once we get our first touch or on our second touch on this line, on this trend line, I'll be taking profit. Those are my intentions. First touch, second touch, I'll be taking profit. I'm not waiting for the third touch because I know that this currency will turn around at any point and it will never come back. So let's come back to reality here. So here you can see that on this downtrend, we have what looks like a second touch, but it's not really a second touch. I want to show you something. Uh, this is how I pronounce the touches. Remember, we have these two order blocks. I'm expecting the pullback, the market to actually drop all the way down to this order block or even get to manipulate it. That's why I have this take profit box down here. I'm expecting it to at least land on this level or at least manipulate this level and I'll be taking profit from that point. At the moment, I'm still in the market, but I'm not really ready for that pullback. But there's a high possibility that the market might actually say, hey, I saw an order block here, and when I get all the way down to this order block, I will turn around and never come back. So there's a high possibility that you might get that. Those are things that I'll be monitoring. I'll be moving my stop loss lower and lower uh, to prevent the market from taking me out. So we have our first touch here, our second touch here. This is the third touch that I believe if we go all the way up here, it might break us below this low so that we can take profit. But I have two take profit options. the first one is here and the other one is down there. Goodbye, guys. I will see you on the next episode.